overall, in terms of the other Asian markets, they've seen a strong performance, especially.
Profit number, it has come in better than what the street was working with.
Now we're looking at retracement targets, 25,485, about an 80-point uptick as far as market open is concerned, 25,200 nearly.
An entry at around 30-35p and exit around 50, you've more than made your money.
Volume, market share and profit in tandem going together. I think this is the approach we have taken.
India has been digitally transformed by perhaps the biggest digital revolution in history.
टेलीकॉम और उससे जुड़ी टेक्नोलॉजी के मामले में दुनिया के सबसे हैपनिंग देशों में से एक है.
Progressing well to be in the winner's circle, which is where this company deserves to be.
The day today so far has been on the downside for the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and it has been a quiet day, slightly sideways, slightly down, and a bit in the red. So 25,064 is where the Nifty is at. This is Closing Bell. Last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant Reema. Surabhi here with me in the studios, and Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Quiet? What are you saying, Prashant? Have you guys seen what Motilal is doing, what Angel One is doing? These stocks, I don't know. Yeah, there's the whole market, and then there are these broking stocks. We'll come to that in just a bit.
I mean, straight off the bat, right, the capital market plays have been jumping. And it's quite incredible because for many of these names, the changes which SEBI has made, which is expected to hit volumes, that's only going to come into effect from the 20th of November, for example, the one about weekly options, etc. Exchanges have been telling us, of course, complaining that volumes will drop. Market-wide volumes could drop between 30 and 40%. And of course, brokers are sort of beneficiaries of what happens on exchanges in terms of increased volume. So we'll have to see. But right now, markets, of course, taking the results with both hands. And that's a big 15% jump. Motilal, as Surabhi mentioned, is up about 10%. Yield-wise, of course, I mean, it's done very well. And the story is slightly different. BSE is taking a bit of a backseat profit booking, etc. So that's what you have. By the way, overall market breadth is slightly negative. So 1,400 stocks are down and about 1,265 stocks are higher. And the Nifty itself is down about 60 points, 25,064 is where we find ourselves at. So on the index level, it's a little quiet, but, broader market, there is a lot happening, which we will touch upon as we go along.
Well, lots changing also in the market. So real estate, pull up the Nifty Realty Index. That suddenly shot up more than 1.5% now in the Realty Index. The spike coming in the second half, in the last 45 minutes or so on the real estate index. Metals has overtaken auto as the top Nifty loser. And the fall in the metal stocks has come in only in the last 1 hour or so. So the Nifty Metal Index is now down more than 1.5%. Autos continue to remain under pressure. The Nifty Auto Index is down 1%, with Bajaj Auto under pressure, and Reliance Industries has taken a bit of a knock. It's been underperforming. About 2 weeks back, I think the high on Reliance Industries was about 3,050, and today even the 2,700 mark has gone on Reliance Industries. So that one is weak in trade. And HCL Tech, good numbers, but the stock isn't exuberant.
No, absolutely. And I was going to actually come to that, and we'll discuss this with you, Reema, and with our experts as well, because while they increased the lower end of their guidance and that constant currency revenue number was so strong, even in the management commentary, they're saying things are getting better, but they're adding a but at the end of it, still being very cautious in that commentary. And I think that's the way that the stock did hit a fresh 52-week high, but it hasn't really moved in sort of top drive, so to speak.
It was actually life high for HCL Tech, not just 52-week
life
high.
Life high. Yeah. So to be fair, it is a big day for the stock as well. Yeah. But yeah, I guess on that performance, maybe some would have argued the market would have wanted to see more. By the way, the big global headline is the dramatic fall in oil prices. Need to put that on the board as well. Look at Brent. I mean, Brent has fallen 4.5%. That's the extent of price disruption that's playing out. Remember, in the morning we were talking about OPEC reducing their forecast for 2024 and 2025. OPEC is now down to 1.9 million barrels in this calendar year and about 1.6 million barrels in the next calendar year. And even IEA, the International Energy Agency, is also echoing that sentiment of weak demand. And that's really playing havoc on prices. At the same time, of course, the understanding seems to be from a lot of the chatter around West Asia that perhaps Israel will refrain from a direct attack on the oil infrastructure in Iran. So all that put together has led to a big collapse in oil prices. European markets are slightly lower. You've got Hong Kong and China. Both of those markets have ended fairly lower today as well. So there's a lot going on global screens as well. But yeah, Nigel, but none of that matters. Like what the stocks we started off with, right? Motilal and the others, Angel, they're in a different market of their own.
Well, I think that financialization of savings and greater market participation of that theme has a long runway to go. You'll get intraday, intra-week, intra-month blips. But I think that has some distance to go. We'll have to see how the charges pan out. But, clearly those plays are doing well. The other segment that you touched upon was the IT space. And Infosys today made a fresh lifetime high. That's telling you the kind of mood on this particular counter getting into its numbers. So we'll have to keep an eye on its numbers and whether or not they're going to tinker with the guidance as well. For the time being, going into these numbers at all-time highs, I'll be interested to see what kind of a reaction we get on that one. And the other point is on the metal index. Earlier today in our morning chart, I said that the dollar index is strong. The metal index has had quite a few tailwinds that are moving in there. But now we're yet to see something concrete coming out of China. And since the dollar index is at around 103 odd, that normally has an inverse relation with the metal stocks. And that explains why, they have got a little bit derailed today. The metal index is one of the big losers. But HDFC Bank, as I mentioned earlier, that's the one that's going to drive from here on. It needs to get past the 20 DMA on a technical basis. The Nifty Bank is doing an outperformance, but you'll need HDFC Bank to participate because it's the largest constituent. Close to around a third of the Nifty Bank is attributed to, HDFC Bank. But how do you position yourself in the final hour of trade? Mitesh Thakkar is with us. Hi, Mitesh. Good afternoon. Well, it's that sort of a day, right? We're down close to around 80 points odd, but the bulls are not letting that 25,000 mark break, which is good news. How would you trade the index and fill us in with a couple of your calls?
So, good afternoon, Aishan. While, the Nifty has kind of tapered off a bit, the bank Nifty strength is actually what is keeping the market steady. And I think if the bank Nifty was to turn slightly weak, then we might see the selling pressure on the Nifty also gain momentum. I've always maintained that this is a market which is now contracting after the decline, and we're not looking at a big upside or a uptrend starting immediately. I think that's the kind of moment playing out. So on the upside, we have a pivot of 25,250 and then 25,354 is the supply zone. And on the downside, I think we have a pivot at about 24,930, 950. And then a big support area around 24,750. So I think the market just might do some base building, do some consolidation. Let's see how it goes from there. But for the timing, it is clearly showing signs of contraction, and therefore a trended movement is unlikely to happen. On the stock side, I have a sell on Cipla with a stop at 1591 for targets of 1530. That's, I think, showing some kind of negative strength. And chemical stocks are doing well. So I have a buy on Deepak Nitrate with a disclaimer that I've got some small quantity in my portfolio, so there's vested interest. But Deepak Nitrate is a buy with a stop at 2860 for targets of 3100.
Okay. By the way, even Nugent Software came out with their Q2 numbers, and it's a good quarter for them, very steady. Revenues have gone up 15% quarter on quarter. Year on year, revenues are up 23%. Margins have expanded for the company on a year-on-year basis, but the stock is under pressure. It's down nearly 5% in trade. So perhaps, it just feels like the good news is in the price because there's nothing per se wrong in the numbers or nothing which warrants a sharp fall. But remember, it's up 65% year to date, and in the last 1 year, it's up 185%. But the street has reacted negatively to those Q2 numbers. Dipan Mehta, director at Elixir Equities, is joining us on the show. Dipan, it's getting more and more clear that this BFSI recovery that the street was talking about is playing out. We saw that in the case of TCS, which saw an acceleration in the BFSI revenues. And even for HCL Tech, the BFSI growth was nearly 4% on a quarter-on-quarter basis. Does that give you comfort about IT stocks and the kind of numbers they're likely to report in the subsequent quarters? Are we really in for an EPS upgrade cycle? Maybe not this quarter, but in 1 or 2 quarters?
Good afternoon, Rima, and thank you for having me on your show. I think it's a bit early to call that. Only 2 numbers have come. Let's see what the rest of the industry has to report. but I'm not impressed with HCL Tech or TCS. I think 2-3% type of 3% type of top line growth is not at all exciting. And let's see how the mid-cap stocks actually, the IT mid-cap stocks, what they report. Because from an investor's perspective, you need to buy a business which has got sustainable growth in earnings of at least minimum 15%, more likely like 20%, if you want to build some wealth and get some alpha in your portfolio. And the IT company, the large cap IT companies are nowhere near that number of 15-20% type of bottom line growth rate. So I would be underweight in large cap IT for the time being and keep my fingers crossed as far as a whole host of mid cap IT stocks are concerned. Mid cap IT stocks have the advantage of a lower base, a few acquisitions here, one large contract over here, some focused vertical presence can make a difference. Like, for example, see the way Tata Elxsi reported numbers. I think they were extremely decent, I thought, as compared to some of the large cap IT stocks which we have seen. And although it's trading at a higher valuation, I think that offers more promise in terms of returns from an investor's perspective than large cap IT. Having said that, Tata Elxsi is a company in which we and our clients are invested in as a measure of disclosure.
Okay, fair enough. By the way, HDFC Life has fallen about 2.5%. After those numbers came in. We have numbers, of course, from the asset management arm also coming through right now. 38% rise in revenue, 32% rise in profits. So that's looking like a steady clip. But let's focus on the insurance arm, HDFC Life, which is where the cut is now about 2.5%. Let's straight away go across to Yash to first understand the fine print, and then we'll get Deepan's take on it as well. Yash, over to you.
So, Surbhi, if you look at the numbers have been good on all counts, but what is hurting the stock and the sentiment today is the number that the companies published on the margin front. I'll take you through the four most important parameters. The first one is new business premium. That has come at about 8,097 crore rupees rather. Our poll was 8,167. It's grown by 14% in the second quarter. The total annualized premium equivalent and retail annualized premium equivalent has far outpaced the poll that CNBC-TV18 was working with. So, of course, it's grown at a pace of 27% for total APE and 31% for retail APE. As I said, both total APE and retail APE much ahead of the poll that the street was working with. Value of new business is slightly missed the poll. We were working with a number of about 958 crore. What has come through is a number of 938 crore. So the market could have been happy with all these four important points. What has hurt the stock today and the result is the margin number. The margin number has come at about 24.3%. We were working with a number of 25.37%. Now, why is this important? The management in an interview to CNBC-TV18 has guided for 26% margin plus minus 100 basis points for FY25. In the first quarter, they did 25% margin, which did fit in that, the bracket of 26% plus minus 100 basis points. Here, this time around, the margin slipped out of that bracket, coming in at about 24.3%. Hence, that is something which is concerning the street. On an average, if you see first quarter and second quarter itself, 24.65% is the average margin for the first half of FY25. So, of course, it's slightly on the verge of that bracket which has been given by the management as guidance on the margin. And hence, that is something which is worrying the stock today.
Okay, all right, Yash, thanks very much for that. And I'm sure in your conversation with the management, we'll try and get some more color into what's the issue. Why this extent of margin pressure and why they have slipped from the band that they themselves had guided, as Yash is pointing out. Deepan is, of course, with us. Deepan, your thoughts? HDFC Life, I mean, maybe this is a one-off, but in general, what's your call on the stock, on the business and life insurance overall?
Subhi, I think it's a stable business, and look at the underlying growth rates in terms of premium income is pretty decent. I mean, getting a business which is growing at 20% plus, which I said is a good benchmark for investors to follow. And valuations also have come off over the past few quarters. Insurance companies have not really outperformed the broader market. So I'm positively inclined towards all insurance companies, HDFC Life as well. Although our favorite, of course, is LIC, where there's scope for re-rating of the valuation ratios as well. But HDFC Life also could be a steady performer. And let's look forward to what the management has to say as regards the drop in margins. It's a very credible management, very, I would say, dynamic. I'm pretty certain that this could be just a one-off, and margins again will revert back to what their 25-26% is what the street is expecting.
All right, Deepan noted that, for the time being, ICICI Pru, that stock is one of the big losers actually from the broader markets. It was trading in the green and suddenly that one has taken a sharp knock. It's now down into the red. It's come off close to 3.5% from the highs of the day. Well, Deepan, I want to ask you about some of these real estate themes. They are buzzing. You have Oberoi Realty that's up. It's at the high point of the day as you speak. Godrej Properties as well is still 10% off its recent peak, but that stock as well is moving well. From the Mumbai real estate pack, do you like anything? Sunteck gave up a pretty good operational performance as well.
No, I think that, Nigel, these stocks are doing well because the kind of numbers, or I would say the pre-quarter releases which have come have been very good, right? From Macrotech to Godrej also. I don't think Oberoi has released anything. But it does show that within the Mumbai market and even some of the key markets like Bangalore and NCR, the revenues and the bookings are pretty decent. Balance sheet qualities are phenomenally better for the entire real estate industry. And they're keeping on adding new projects. So the net asset value, the net realizable value keeps going up quarter after quarter. And these companies are rated more on the net asset value and what the potential revenues is rather than the actual earnings per share and the price to earnings multiple. So one should remain overweight in the real estate sector. And Oberoi Realty, I think, is one of the better stocks, I would say, because it's got a diversified revenue stream, as does Prestige, because they have some rental incomes also. In DLF also, you could add over there. So that gives some amount of stability to the earnings. But this is one sector, which is refusing to show even a cyclical drop in the revenues, which is quite surprising.
Let's talk about Divi's Laboratory now. It's under pressure on the back of fresh news flow. Ekta is here to tell us more. Ekta.
Thanks for that. Well, this is an issue which has been going on for Divi's Labs for some time now because they are the API supplier to Novartis, which is the manufacturer of the heart failure drug Entresto. Now, the US court in the latest developments has rejected Novartis's motion to declare a US FDA approval for MSN, which is another pharma company's generic version of Entresto, as unlawful. So that means that generic competition is likely to enter the market for Entresto generic sooner than anticipated. Now, the spokesperson for Novartis said that the company disagrees with the court decision denying their request to reverse the FDA approval. Novartis has said that they are considering all available options at this point in time. Like I mentioned, it is a heart failure drug. It is one of Divi's largest drugs in its CDMO portfolio. Kotak had written on it in August and they said that there is a downside risk of a sooner than anticipated launch of Entresto generic for Divi's. Kotak had not factored in generic entry before second half of FY26. They estimate that the CDMO contract with Novartis for Entresto contributed around 8% of total sales for Divi's and 19% of their CDMO sales in FY24. And an earlier generic entry could lead to a 10% plus downside risk to the FY26-27 estimated EPS for Divi's. So what this means is that there could be competition which could be coming in earlier than anticipated for one of the big drugs that Divi's is an API supplier to when it comes to Novartis.
Ekta, thank you very much for that. Stocks recovering. I mean, so 8% is not small, but there is enough interest at lower levels. Stocks refusing to sell off. 61.27 on Divi's. Deepan, do you own this one? Track this one, Divi's?
Yeah, actually, measure disclosure, we have a small holding in Divi's Laboratories, and we are seeing quarter after quarter the numbers improving, and CDMO is the mainstay. So when those revenues start to increase in proportion, the margins automatically start to look up for Divi's Laboratory. And this could be a minor setback, but look, it's got many new molecules going on stream. The order booking also is improving over there. And on the whole, I think pharmaceutical companies are doing much better. And a lot of investors want to get overweight pharma. I think amongst all the industry with a large market capitalization, pharma is something which is doing exceptionally well, and Divi's is really a blue chip stock over there. So I would say that it's a setback, but by and large, I think we are positive on Divi's Laboratories, and we do expect good numbers from this quarter onwards.
By the way, I was just checking the subscription updates on day one of the mega IPO Hyundai. And the total issue has been subscribed only 0.14 times as per NSE data. And this is the consolidated bid data, I think, across exchanges. Deepan, what's your sense? We had a very lengthy conversation with the management, spoke about a lot of the issues that the market raises, like, competition in the SUV space and their funding requirements, the fact that there's a lot of paper supply with the promoter selling 17% stake. What's your call on the issue? And I mean, it's still open for subscription. So what are you telling people to do?
No, we are telling investors to apply, and we ourselves are also going to apply for the IPO as a measure of disclosure. But I wouldn't expect a big bang listing. And one has to be a bit patient over here, have a slightly longer term investment horizon, 2 to 3 years or so. When you look at the qualitative factors between Maruti and Hyundai, I would tilt towards Hyundai because of the positioning, the kind of models which they have, and their EV strategy as well, not to mention the overall financials. So I would say that it's a good opportunity for investors who missed out on Maruti, want to get into a nice blue chip auto company. Then you could go for the Hyundai IPO, then on listing, which I don't expect to be something phenomenal. You could even average further and make it like a part of your core holding, because clearly it's a great automaker and it can be a consistent performer as well. But as I said, I think next couple of quarters are dicey for the entire auto industry, Hyundai and Maruti both included. So you have to ride out this soft period, soft demand within the auto sector. But look, 3 to 5 year investment prospects are very good for the passenger vehicle industry.
Got it. So it's for the patient investor, says Deepan. But Deepan, are there any such people out there? That's the question in this market, right?
Well, you're looking at one.
That's used. Absolutely. I'm looking at one right now. Absolutely. And, it is for people of that mindset, a long-term wealth creation. Got it. Deepan, good talking to you. Thank you so much for joining us on the show today. We will take a break on that note, come back on the other side, lots more to discuss. We will also, of course, have our next guest join in, Nikhil Rungta of LIC Mutual Fund, who will be with us in just a bit.
Welcome back. Sterling and Wilson Renewable Energy has surged in trade. It's now up close to about 5%. There was this Q2 conference call. Vivek joins in with the key takeaways. Vivek?
Well, that's right. So yesterday they declared the results. We'll quickly go through the results. Revenues high at 36% on a year-on-year basis. EBITDA quite strong, 18.1 crore against around 1.6 crore. Margins too quite strong, 1.8%, and profitability versus a loss last time around. Now, what is it that the company gave post-market as yesterday that has kept the investor community quite excited? Number one, the order book of the company currently stands at well over 10,540 crore. This is at the end of Q2. And in Q1, it was just around 8,084 crore, indicating that the company has received orders worth almost a little over 2,000 crore in Q2 itself. Total debt, has actually inched up a little bit. But what is it that the company is saying? The company is saying in terms of the gross margins, legacy international projects are now behind them, and they are expecting gross margins to continue to trend at 10%, which is positive. But on the other hand, when you're talking about the O&M business margins, they're expecting that, Q1 it was at 28%. They are expecting it to go slightly lower to 25%, and that is why they expect the steady state margins to actually go and settle at. Very importantly, the Nigeria order. This is something that the street has been waiting for quite some time. The company says final terms have been negotiated. Procedural steps are in progress. The company is awaiting the final contract signing. And this will be a very key trigger as far as Sterling and Wilson is concerned, especially in terms of the size that it will add to the order book. Now, as the company held a conference call today morning, what they're saying is that out of the total 8,000 crore guidance that they're given for FY25, a little over 3,200 crores has already come in. They're expecting significant pickup in execution in the second half of FY25. So the guidance is intact for the revenue at 8,000 crore. They've availed a new 500 crore loan facility from IREDA, which indicates, which is why they actually saw a bump up as far as, Q2 debt was concerned. And they are working on pilot projects as far as Reliance Industries is concerned. Expect the pilot projects to complete by the end of next quarter. And they don't expect any further selling of stake by the promoters. On the back of that, some positive news flow, positive commentary. Stock is doing quite well in the session today.
From 800 to 500. Vivek, by the way, on the con call, did they say that Nigerian order will come this quarter, next quarter? Any firm timelines now?
Well, even in the investor presentation and even in the con call, what they're saying is that all the terms have been negotiated, procedural steps are in progress, and they're awaiting the final contract signing. So I don't think it's in their control, which is why they've been unable to give a concrete timeline as to when this particular order can come in.
Okay. All right, Vivek, thank you very much for that. Stocks, of course, limit up. Coming off beaten down kind of levels now. Nikhil Rungta is with us, Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good afternoon. Good to have you here. Oil prices are off sharply, $73, $74. And this is good news for a big oil importer like us. Any implications as you see it? At the margin, does it help things? Would you look at any specific sectors on the back of it, or if prices go even lower and stay low, does it sort of add one more tailwind to the market? What's your sense?
Yeah, hi, good afternoon, and thank you for having me back. Definitely, it's positive for India as a country, and we are definitely bullish on a couple of sectors which have this crude as their raw material. So there we will see a decent rise in margins, and we are hopeful that it will settle down at around similar level of around 70, 75 odd levels. But yes, it's a thing to wait and watch what happens globally. In terms of commodities specifically, definitely it's one of the large commodity for India as a whole. And it does impact not only one, two, but many sectors.
Hi, Nikhil. Good afternoon and good to see you, Ben. Nikhil, what's your take on the chemical space? And I think one of your funds have Sudarshan Chemicals. You can correct me if I'm wrong. But they have gone ahead and they've made a big acquisition. Your comment first on the chemical space and about this, these Indian companies going out there and making these large acquisitions. Sometimes they don't turn out according to plan, but sometimes they work. Your comment.
So, hi. Definitely on the chemical as a space, we do like chemicals, and we believe past 2-3 years, the sector have not performed at all. And going forward, we see that the sector have bottomed out. The commentary from the managements are also improving. Coming to specific companies, I mean, without naming, a couple of Indian companies have definitely made few acquisitions outside. But here we need to go on a wait and watch mode. How these specific companies, which are going for an acquisition larger than their own size, definitely not only global, but last year we saw one of the Indian company going out for an acquisition larger than its size, and definitely the stock performing well. Here as well, we need to wait and watch what exactly they are doing. But yes, they are actually diversifying themselves, be it in terms of additional customers, new customers which we are gaining, or in terms of additional facilities or technology which these guys are getting from these acquisitions. So we are bullish on this space, and we definitely like these companies. A few of them definitely work out, few of them don't, depend given the time horizon. And yes, the company under review have already done a couple of acquisitions historically. So we need to wait and watch this type of acquisition, how it plays out going forward as well. And we continue to remain bullish on the sector and space as a whole.
Nikhil, hi, afternoon. So based on the IT numbers that have come out so far, TCS, HCL Tech, Tata Elxsi, is there a case to go ahead and increase the weightage in technology stocks?
See, definitely. I mean, since past couple of months, 2 times when I'm coming, I have indicated that we continue to remain positive on the IT space. And definitely one thing which is very clear now is the space is bottoming out. The commentary which we are getting from the US market in terms of IT spending, specifically on the from the BFSI entities, is they have started looking at these things incrementally. And your election is also around the corner, just around a month from here. So we will see things improving from here on. Earnings have bottomed out, and we continue to like the space, and we are increasing our exposure in the space as well.
Got it. That's IT. Nikhil, hi, good afternoon. Want to get in your thoughts on the auto space, right, in light of this mega IPO that's there in the market. And we were discussing this with the Hyundai management as well. And the question that I have is that the slowdown that we're witnessing in passenger car sales, is that only cyclical, I mean, temporary, or is it a structural change? Because the post-COVID revenge buying, or pent-up demand, whatever you want to call it, well, now that it's completely behind us, what is the new normal? And that's the PV side. And then there's CV, because though the economy has been firing, there's nothing wrong. I mean, we talk about growth almost across sectors. I mean, the CV cycle is just not picking up at all. So what's your, slightly more short to medium term view?
So on the auto side, definitely we are more bullish on the auto ancillaries compared to autos. Last time as well, I indicated the same thing, because in auto ancillary, you get to play not only your individual or PV or CV, but you also get to play your aftermarket and industrials as well, because a lot of auto ancillaries are moving into these industrials and defense as well. Of course, on the auto side specifically, this we believe is just cyclical. What we have seen, I mean, if you want to put a word of post-COVID era, then we believe that post-COVID, I mean, 4 years is too long a time horizon. That should have been the part of, or should have been the case only for the initial 1 or 2 years. But what we are seeing in the past couple of years is definitely increase in your premiumization and discretionary spending. Two-wheelers numbers you have already seen, they are definitely good as of now. On the CV space, slightly on a wait and watch mode. Tractors, channel checks are indicating improving cycles there as well. So we continue to remain bullish from a medium to long-term perspective. But yes, we continue to remain more bullish on auto ancillaries over OEMs.
Do you have exposure, Nikhil, to brokers or exchanges like BSE, CDSL, etc.? They continue to soar.
We do like them, but yes, valuation continues to remain a concern for them. They'll be definitely be part of our portfolio provided the valuation allows that.
That's brokers. What about other non-lenders, non-banks, non-NBFCs? I mean, you have the life insurance business, you have wealth management, asset management, general insurance. What else do you like?
So on the financial side, we like more of non-lenders over lenders. In non-lenders, specifically the insurers, the wealth managers, specifically the AMCs, we do like. On the lending side, we are more bullish on the NBFCs over banks. Of course, for the banks, it's more of near term rather than a medium to long term. Over a medium to long term, we continue to like banks as well, because we believe the valuation there are justified in this type of market where you are trying to find out opportunities or value pick. So financial as a whole have now become a value pick in the entire gamut.
You know, Nikhil, as we speak, post those numbers coming in from HDFC Life, the biggest losers in this hour is actually all the life insurance names. HDFC Life, SBI Life, ICICI Prudential, all of them, they're getting smacked actually. It's a marginal miss on the VNB margins, but the street is not taking it lightly. For the time being, I don't know whether it's an over-exaggerated move, but these stocks have pulled back considerably. Nikhil, final question before we let you go. What about Reliance Industries? You know, that was the poster boy of the big run we had in the last few years. But in the last 6 months, it's been a little bit off color. We're looking at a brokerage note today. They are indicating that at these valuations, it normally makes money. Would you be in that camp? It's already part of a couple of your funds.
So I won't speak on a specific company, but I'll put it this way. Definitely from a medium to long term perspective, we do like those companies which are moving into these emerging themes. The new energy vertical which the company have started, we definitely like that, and it has actually started making money for the company as well. So we continue to like the space, but yes, we are in the large cap space. We are playing more from the position sizing rather than individual stock specific. So most of these stock will be part of our portfolio, but in terms of portfolio sizing, we'll be trying to bring alpha from there.
All right, we'll leave it there. Nikhil, thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Well, I think, we're going to take a quick commercial break here. D Street Chatter with Nimesh, who's going to tell you what's happening in dealing rooms and what stocks are on his radar. We'll get you some trading ideas as well. Stay tuned.
That was already done. Welcome back. Well, signs of a bit of recovery from the low point of the day. So it's been that sort of a day. Those dips, those mild dips are getting bought into. For the time being, you have a couple of stocks. Ultratech Cement has moved to the high point of the day. And Asian Paints as well. You have the tailwind now with regard to crude oil prices have corrected back to around $74 per barrel, which is good news to them. And the second half of the year ideally should be stronger. So it could explain why Asian Paints as well recovered a wee bit from the day's low. But a good time to tell you what's going on in D3 Chatter. Nimesh is with us. Nimesh, that's sort of a day. We've been in a bit of a range, but plenty going on in the broader markets. How are you reading it?
Well, the reason why there is plenty happening in the broader market, because from a flow perspective, Nigel, today there is selling in the large cap names. In fact, there's going to be a MOC basket selling as well in the last 30 minutes, largely in the Nifty names. On the other side, there is enough buying from the DIs, from the FIs in the broader market stocks. So there is a basket of mid cap and small cap which is getting bought today by the large institutions. So that's the reason why the mid cap index has relatively outperformed in today's market. You spoke about crude sensitives doing well. Even the rate sensitives have done well today. The real estate names are doing good. Some select banks have done good. NBFCs slightly are doing good. So it's a very very stock specific move. Overall on the Nifty, there is pressure because of Reliance and because of selling pressure. But the broader market seems to be in action largely on back of buy flow. So there is interest back in the mid cap and small cap names, and well bid as well by large institutions.
Well, from a portfolio perspective, it could be the ideal thing, right? Because the headline index is not doing too much, but your portfolio will be feeling good.
Yeah.
That said, what about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock is Mastech. Big recovery in that stock after a large block. Nearly 2% equity got changed hands. I understand the FI was a seller. It's a clean out trade from a long only fund, and some large HNIs and a mutual fund was a buyer in today's block deal. So maybe if there is a disclosure, that could be interesting to track in Mastech. The second name is JM Financial. It's been buzzing off late. Today, in general, all the broking companies have done well, but JM stands out. There is buy flow. Additionally, there is a buzz that maybe there could be some corporate development as well in JM Finance very soon. The third name is RK Forging. We highlighted the UBS initiating report in the morning as well. Big target for 1500 is a target price. But apart from that, there is delivery-based buying as well from large institutions in RK Forging today. And the last is Suzlon. For the last couple of days, that is relatively underperformed. There are sell-flows as well. Even today, the delivery will be on higher side. I understand some long-only funds are active sellers, and hence that stock has been pressure off late, and that's the case today as well.
All right, got that. Thanks for all the buzz, Nimesh. We will keep those stocks on the radar. For the time being, back to the markets. At the Nifty level, still down about 75 points, but the Bank Nifty is managing that little hint of green. Otherwise, it's been a very quiet day in terms of the index. We haven't gone anywhere. Mitesh Thakkar is back with us. Mitesh, what do you make of the day? And what are the trades now?
I think, the banks kind of saved the day, though I think it's a slightly negative session. But I think I would not be really worried about the 70-100 point kind of moves, because my belief is that we are still, kind of consolidating and we're in the range. So I think that movement is expected to continue for the next few days. On the stock side, BTST on overall reality, I think that's one stock which is trading at the swing high. So keep a stop below 2004, look for targets of 2060. And the other one which I have is an STVT and Aurobindo Pharma with a stop at about 1490 for targets of 1465.
Okay, got it. Thank you for that, Mitesh. By the way, as we take our next break, the move on Angel One is simply an unstoppable move. The stock is now zooming 18%. That's right, you heard it, 1818, 3225. It's just been another story, Angel One, in the last couple of months. Let's take that break. We'll come back. We'll be in the last leg of today's trading action. And of course, we'll get you some thoughts from Jay Bala of Cash the Chaos as well. Welcome back. You're with us on Closing Bell. Quiet day, as we've been pointing out. It's all about individual stock action. Jay Bala of Cash the Chaos is joining in. Jay, good to have you on the show today. You know, we want to start off by getting your thoughts on some of the stockbroking names here in the Indian market. I'm sure these stocks wouldn't have gone unnoticed by you as well, whether it's Angel One or Motilal or today IIFL Securities. There's been a huge surge that we've seen over the past couple of months. There are also names like BSC. So basically, when you look at the whole capital markets play, do you think that these stocks have more legroom, more steam on the way up, or are they entering some sort of a final phase of the rally?
When it comes to, it's a diverse space actually. Good to be here. See, Motilal Oswal, actually, that's probably on its finals leg of its stretch, at least for this leg of the move. But when it comes to Angel One, it's been an underperformer. Probably it's trying to play catch up with Motilal. But it's a bit of caution needed here, because when I look at the overall markets, the frontline heavies, we discussed Reliance for several weeks since August now, and there are other stocks which are signaling the probability of correction, which could get deeper for the market as more probable. We spoke about TCS2 last week. I said that market's unlikely to like the results of it, and that's exactly what has happened. And Infosys is coming to an exhaustion point. If it were to reverse from here, it could be a severe, sharp correction. And ICICI has come down and signaling that could be a larger move. ITC is signaling it's a reverse for the short to medium term. So the number of heavy stocks on the Nifty are signaling the probability of a sharper correction is increasing. And when it comes to the US markets, the sentiment has frothed up to a sufficient level where it warrants a reversal. And I have a time cycle coming up for the US markets around this Friday and Monday. So if we have a reversal either this Friday or Monday for the US markets, that will also add pressure to the overall equity markets in the world.
All right. Hi, Jay. Good afternoon and good to see you. When I remember that call you made on TCS, but now there's another daring one coming out from you. I'm looking at the chart of DLF. At least for today, it's moving with a lot of strength. But you believe it's providing a shorting opportunity? DLF and I believe granules. Run us through levels and rationale for both those two.
That's right, Neeraj. See, the structure for most of the realty stocks is that it's in the last leg of the move, and the markets are likely to drop for the real estate sector. And I wanted people to be cautious over here. But DLF has got a very short-term upside to somewhere close to 885. So, and I want to see a reversal from that. If it does that, I think it's doing what I'm anticipating it to do. But it's not an easy shot. A stop loss at about 923 is very important. And if you're conservative, you might want to see that reversal that I'm anticipating come through from 885 and then act on it. But Granules is a much simpler short. At least it looks like that. It's a rank underperformer. It's come down from its 52-week highs in a 5-step fashion, and the recent move from the lows looks like a corrective bounce. So if it were to drop below 590, that will confirm for me that it's starting a much sharper drop for the next leg, as it's been underperforming in the last few weeks. I'm expecting a price level of close to 480. A stop loss of about 623 is essential for it.
Jay, you were watching for lower levels on Reliance Industries, and today it's fallen another 2%. Where does it go?
See, there are two possibilities for me. I'm anticipating the stock to either bounce from somewhere around 2660 to 2592, or slightly below 2592, and then begin a move toward all-time high for the stock. But if it were to stay below 2550 and then just say meander around in a sideways fashion, then that will be bearish for the stock. But right now, I'm anticipating some support to come in from somewhere about 2660. If it doesn't happen, it's a negative for the stock. So I'm just neutral on the stock for the moment because I've been bearish since 3100. I want the stock to do certain things, and I want the market to tell me what it's doing, and then I will decide where it's going.
I was Jay. Hi, I was thinking, how do you short Granules? But then I checked; it's in the F&O segment. one of your two trades. DLF also I checked. I mean, it's not done anything for 8 months now. So it's in that same range since February of this year. So it's it's kind of course, it's moving in a range, but hasn't really broken out or anything of that sort. But that's a trickier one, as you said. What else, Jay? You briefly mentioned things are looking like in the things are coming together in the US as well, which indicates that maybe we're in for some weakness. Do you want to explain that?
Yeah. See, markets are a function of price, time, and sentiment. And right now, the sentiment for the U.S. equity markets is so extremely bullish that it can become bearish. Any push on the negative side would just make the boat topple. So I'm looking at the U.S. S&P futures to rise somewhere close to about 59.80 to 6,000. And slightly above, if it reverses from that, that will give a very nice setup for a reversal signature. But it's not at reverse. I'm watching for it. But when it comes to the U.S. Equity markets, the Russell 2000 doesn't believe we are in a rate cutting environment. The Russell 2000 is much below the July highs. That usually in a rate cutting environment, small caps tend to outperform. But Russell 2000 is still below July highs, so it maybe that can change. But right now with the excessive sentiment and it's still not above the July high. Even that's also pointing to something. And U.S. 10-year bonds had a very good reversal signature to the bullish side, and also the dollar index. The dollar index has come to about 103. A minimum move to about 106.5 or ballpark is quite possible. So that's also signaling some possibility. A short-term pullback for both the U.S. bond yields and the dollar index is likely, but post that, both are signaling higher levels.
By the way, sudden spike in the broader markets. The mid-cap index is now up 150 points. The small-cap index too has picked up, though the advanced decline ratio still remains 1:1. But in the last 10 minutes, there has been that pickup in
Bank Nifty is also
Bank
picked up
Nifty
100
also
points.
It was flattish.
Yeah.
ICICI Bank is leading there, so ICICI Bank is up nearly about 2%.
Okay, I guess any short-term immediate trades, given the caution that you described, Jay?
Yeah, I mean, I just don't want to go too much into the deep end of the pool. I'm just treading water at the moment. So I'm watching Infosys for a reversal. IT, I think, has come to a very important resistance. That's coming off from important resistance. And if Infosys also disappoints, I think the IT sector will be a short for me.
Okay, yeah, well, it's done well today. Infosys also at record levels at 1961. Thank you for being with us, Jay. Let's quickly start recapping a day that's been quiet, but we've had a little bit of spark, some action in the dying minutes of trade. So if we talk about the Nifty itself, the cut is about 53 points, and lots of the big boys on the way down. HDFC Life down after results. Bajaj Auto down 3% ahead of results tomorrow. So a lot of caution on some of these names. Wipro's ended with a cut of about 3%. Bajaj Finance, Hindalco, Tata Steel. These are some, even JSW Steel. So metals in general fairly weak. And then there's Reliance. The result reaction is a 2% cut coming in on the stock. So that's the large cap arena. The leaders, of course, included the oil marketing companies, thanks to the big drop in oil prices. BPCL is a nifty winner with a 2% gain. ICICI Bank, Britannia, Bharti Airtel and BEL are some of the other green names on the upside of the Nifty.
In the broader markets, it's Angel One, top honors, 18% higher on the back of the Q2 numbers. It took with itself Motilal Oswal, also ending with a double-digit up move. Network 18 also deserves mention because it's a 10% rally on Network 18, TV18 broadcast, 7.5% higher. Five-Star Business Finance also moving up on very large volumes. Suntech Realty reacting to the business update with an 8% gain. In the IT pack, it's First Source, remember, gets most of a chunk of its revenues from the financial vertical, and First Source ends with a gain of about 5.5%, and Mastek is the other one, which ended up with strength. On the way down, you had Nugent Software profit booking after a steady set of Q2 numbers. Nalco weak in trade, Bandhan Bank under a bit of pressure, and Oil India lost close to about 5%. But all in all, a quietish session for our markets. The Nifty is ending at 25,066, a cut of about 60 odd points. Banks did well, led by ICICI Bank, and mid-caps and small caps managed to close out in the green, eking out an up move in the last 10 minutes. With that, it's a wrap and closing bell. Thank you for watching, but don't go anywhere. Markets Forward comes up next.